Hello and welcome to the Airline Business Podcast, discussing key news and trends in the global airline sector. This time, airline profits to inch higher as lower fuel costs outweigh continued supply chain woes and wider risks. And what next for global alliances? My name's Graham Dunn, and joining me as ever is Airline Business Editor Lewis Harper.
Hi Graham, how are you?
Yes, not at all bad. We're in the run-up to the end of the year and a year of ups and downs in multiple ways. And for the airline industry, I think just about up when we tally up the final numbers.
Yeah, although, we'll probably come on to talk about that. That depends which reference point you're using for 2023. But broadly, I guess a year, very much of ups and downs. I think we talked across the year in the podcast about how expectations changed. I think early on it was, I think there's still a lot of the post-COVID sort of momentum. And then some of the year-on-year comparisons started to look a bit weaker in the second quarter, partly because they were so strong in the same period of 23. But that then sort of dented in, I think, optimism about the second half. But then the second half, as it stands, and we won't find out how the final quarter's gone for a while yet, but certainly a bit more optimism. So an interesting year in that regard, and a slightly complex picture, I think, when we move on to talk about how it does ultimately compare, or is likely to compare with 23 in profitability terms. A narrative which I think IATA might have avoided in the recent Global Media Day, just because I'm probably going to struggle to explain it. But there we are.
It is complicated. I think the fundamental story, and we're going to talk about some of the risks that have been identified to the forecast, I guess both positive and negative, but we generally, being journalists, you like to focus on the negative. What's going to ruin the industry next? That's definitely the journalist way. But so there's lots of factors, but the fundamentals of any airline industry is about revenue and about costs. And the revenue, GDP growth is broadly steady, around 3%. And costs, while there's lots of activities all around the fringes, airline's biggest cost is fuel. And, that has gone down. And that is the reason, isn't it, that as a sort of trend line in terms of where I thought the industry was 6 months ago and what it thinks is coming ahead, is that the picture is steady improvement.
Exactly. And of course, fossil fuels are great again, I think, for the airline industry at a time when obviously a lot of talk is about how expensive SAF is. And of course, next year, certainly in Europe, we get some of the mandates coming in. So that's something to watch. But as you say, it's sometimes easy, certainly as journalists, to get drawn in by a lot of the noise on some of the issues that might be on the fringes in terms of profitability. As you say, I think the key narrative that IATA has put forward in the second half of this year and looking into 25 is fuel cost benefit. And obviously with the caveat, they're not stupid. They know that no one can confidently predict where oil prices are going. But as it stands, yields have held up better than perhaps expected at some points during this year. And generally, we found the same listening to all the earnings calls we do. There was a point where that became the story, but I certainly think the big European groups, for example, generally looking, if there is any softness in yields, it's been 1% down or something. We're not talking big changes there. And at the same time, oil prices have kind of come down. The crack spread has dropped back down to something more like historical levels. So that's the difference between the cost of jet fuel and crude oil. And there is an argument, as much as oil prices are hard to predict, I think certainly Maria Owens-Thompson, the chief economist at IATA, has put forward the argument that there is something structural to lower oil prices potentially as well. So in China, for example, the use of liquid gas for long haulage is a factor that suggests that those lower oil prices might have a structural element, again, with all the caveats around that we know there are other risk factors and the oil can spike quite quickly if some of them come off. So, as you say, the biggest cost for airlines. We also know that there have been some eye-watering labour agreements that have put cost up structurally. But ultimately, if your biggest cost has come down and sort of trending at a better level. Yields are holding up on the passenger side. On the cargo side, we know that the story has been better, I think, than expected. Certainly in 24, I think a lot of people at best were hoping for a flat year there, but actually demand and yields are higher, partly because of the Red Sea disruption. I do think, there are some fundamentals there into 25 which are backing up IATA's kind of optimism over profits rising next year.
Yeah, I mean, you're absolutely right about fossil fuel. And the irony is, if IATA and the industry is looking at it at two fronts, which is you have fuel today and then you have future fuel costs. And, and actually it's quite sort of welcome for them that their biggest costs, and as the oil price goes down, that ratio goes down to maybe sort of 30% or something like that. But of course, one of the things is that if something isn't done around SAF, if they can't get the cost of SAF down, then actually their future oil costs then shoot back up to like 50% of their costs, and suddenly it's another big issue. So you do have this long and this short-term issue. But you're right. I think the fundamentals are, and we have seen, and we'll come on to talk about the risk of geopolitical factors and shocks, but actually, with two major conflicts going on at the moment, that actually even within that, the impact of that is relatively localized in terms of the impact on industry, and travel flows find different ways to continue in one way or the other. So I think, that steady global growth and, lower fuel costs, and when you add in, the year of turmoil that it looked like it could be with various elections, we find ourselves at the end of the year broadly, steadily where the industry thought it might be. And that actually is probably a good thing. Now, we won't dwell too much on this because it is quite complicated. But obviously, we, with the airline business track across the year, we spent a lot of time monitoring how the industry is doing against the same period last year. And on the last podcast, you were talking about at the 9-month stage that the industry looked like it was going to perhaps struggle to hit the kind of profits that it had in the previous year. Now, actually, IATA lifted its global forecast for industry net profits, I think to 31.5 billion, up by about 8 billion on what it thought the industry was 6 months ago. But it is a case where it's possible for things to have both got better and worse in the same time, isn't it?
Yeah, it's a strange one, as you say. Yeah, so their prediction for 24 is slightly better than it was when they last gave it in June. But at the same time, obviously, a narrative we were following is always one of interest. And obviously, at individual airline level, it might not mean so much, but as an industry, is this year going to be better than 23? And now that's where it gets a bit complicated, because back in June, IATA was still projecting that 2023's net profit, I think, was going to be around 27, 28 billion. So, on that basis, even without the upward revision we've seen for 24, the industry was still tracking ahead of 2023. Now, of course, what IATA has also revised is its 2023 figure. Obviously, now that's based on much more solid evidence from actual earnings reports. And now that's gone up significantly above where we think 2024 is going to land. I think it's around 35 billion, that kind of level. So we're in a weird situation where anyone whose instinct was that 2024 didn't feel as strong as 2023 has been proven right. But that wasn't because we were overestimating 2024's performance. I think because 2023's was being quite, by a few, probably 7-8 billion, we were working on a much lower projection for 2023's performance than actually the reality. So that's the rather complicated picture there. I would say that in 2025, IATA is projecting the industry to exceed both of those years. And, given what we're talking about now, obviously, I think IATA would admit these forecasts are inevitably wrong, and I don't think that's clearly not unique to IATA or the airline industry. It's the case with all forecasts, but it is worth noting that the level, I think, of 36 billion, that sort of level, the industry would be within touching distance of its best ever year. So that's one to watch. But as ever, the other message is these are thin margins, and a single quarterly profit for an energy company might knock that out of the water. So the other message for IATA is we still can't afford to pay for the energy transition, even if we are saying that profitability is improving. So
I think you're right, and it is interesting because we're looking at it in absolute terms, and 36 billion would be the best profit since the pandemic, and would be pretty much up there with previous record highs. But of course, that is on ever-increasing revenues. So revenues will top $1 trillion in 2025 for the first time. Passenger numbers will pass the 5 billion.
Yeah,
I've got my billions right. Yeah, the 5 billion mark for the first time. Significant steps ahead. And so, whilst the profit actually in absolute terms is strong at a net profit margin of 3.6%, it's still not necessarily that significant. And obviously, as you know, as the numbers get bigger, small sways in them will have a larger kind of impact. So the industry is in quite a good place. Clearly, this low oil price materializing is one of the key factors, and that's one of the risks IATA identified around what could happen in 2025. Another one of those was obviously the geopolitical factors and possibly development there, and obviously with developments in the war in the Ukraine and in the Middle East and Gaza. And we've already obviously seen developments in Syria. We've seen some signs of, more optimistic signs around Lebanon. So that definitely remains on everyone's radar. At present, it's had a relatively localized effect, I guess. And I suppose, aside from what it means for people in that region and carriers operating in that region, the important thing in terms of global airline profitability would be around that remaining localized and hopefully actually resolving itself in some way.
Yes, certainly. And as you say, the impact on local carriers has been significant. I mean, curiously, obviously, in the case of El Al, because so many international carriers have pulled back, they've actually had a pretty successful time financially because the competition has just fallen away there. So even amid all that turmoil, that there are, still positive stories on the earnings side for certain airlines. And as you say, it remains relatively localized. I think there's obviously a broad sense with some developments. The world does feel like a less safe place compared with where we were a few years ago in this regard. And I think it's quite right. They're listed as risk factors because who knows what could happen. But as you say, some of the trends might be towards an improvement there, and as much as they're risk factors, there obviously it does carry a potential upside if any of them develop in a slightly more positive nature in terms of the conflicts ending or ramping down significantly. And I'm not in any way making predictions in that regard, but yes, I think it's right they're there. And I think that's where also the other big risk factor comes into play, which is what happens in the US with Donald Trump. And I think, Graham, you're going to predict that very accurately now. What's going to happen in the next 4 years? And
absolutely,
So.
Absolutely. It's interesting. I've heard quite a few sort of people who we've met out and about in the industry, and no one, I think, is 100%. A lot of people are looking at what's happened last time he was in, and that was a period. Obviously, you had the heightened trade pressures with China, and there's a possibility of that spiraling further this time around. Equally, only got as far as it did last time, and we had the travel ban for various countries as well, which again, a massive news story. But even aside, within that, actually, its impact on travel demand is on the fringes. It's only one market. And so when you look at what happens with that, what happened previously when in Trump's previous regime didn't actually have a massive impact on the industry. I mean, it had an impact on particular markets. You can see all sorts of areas. And, certainly for the US industry, he created quite a supportive regime, or pro-business regime. And, this is why, Willie Walsh has, when he's been asked about it, has been talking about the airlines see it broadly as a net positive. And certainly compared to, some of the actions of the Biden administration, which got very involved in regulating the industry. So maybe there's that element. Obviously, it's connected, maybe less so in terms of the airline profitability side of things, but in terms of the sustainability element and, an expected rolling back on Biden's IRA, Inflation Reduction Act measures on sustainability. That will have an impact. I think it's probably not going to, the general view was probably things aren't going to change for the next year, and within a year, what will be happening? So, trying to tell apart some of the rhetoric and some of the things with what will actually happen remains to be seen. So I sort of identified, there is a risk of it having a sort of spiraling effect, but equally, it may not.
No, and I think another important issue looking into 25 that is relevant to that is the constrained supply. So when you mentioned, Graham, some of the impacts of travel bans and things, but certainly in international terms, there aren't many carriers who wouldn't have a problem reassigning capacity to different markets should a situation occur where a small number are no longer available. So I think that while there is a lot of industry frustration around the lack of new aircraft deliveries, etc., one thing is for sure in that environment, and obviously it's definitely spread to the wide body side of things. I think people aren't, if that's the 777X being delayed again, or generally delivery delays across the board and engine issues, etc., in wide bodies as well. These are all contributing to an environment where if you've got wide body aircraft that are flying, you're not going to have too much trouble, I think, assigning them to different markets, depending on different factors that policies your government might bring in. So I think under a lot of scenarios, if the industry was, as it has been in the past, slightly more sort of tended towards overcapacity, then these things can have a bigger impact. But I don't think in 2025 there are going to be many airlines having trouble working out where to send their aircraft. So again, these broad policy changes and whether there is significant or not for the industry, I think it's hard to see it having a huge impact really on certainly US carriers. And as you say, given that been some positive noises that the Trump administration is likely to be more business friendly, and I'm not suggesting that all the CEOs are embracing that as a positive, but I do think there's some feeling in that regard. Then that side of things is a positive. But it's one to watch and definitely deserves to be in the risk factor column. We know that tariffs and everything like that you mentioned pre-COVID, obviously the US-China tensions in 2019 was a reason that the air cargo industry didn't go into COVID in particularly rude shape, because those were weighing on demand certainly in 2019. There's lots to watch there, but some of it's already baked in, I think, to assumptions as well at this point, and we'll wait and see what actually plays out.
And it's definitely interesting to see when you see squeeze in some markets, that demand is there. So it's interesting, the Middle East region seen as, actually they're seeing increasing yields in 2024, the only region to have done so. And they're seen as another year of strongish profits, both this and next year. And, that's a complicated story, because there are some carriers in the Middle East who are really, really struggling as a result. But the big Gulf carriers, the connecting operators, are benefiting from factors such as, because there's less direct traffic between the US and China, there's traffic which is connecting through the Middle East hubs, because, there's likewise across between Europe and Asia. So they're picking up traffic through there. This demand doesn't go away when you have more isolated pockets or localized issues. It just changes the pattern of travel to some extent or another. And as you say, in this kind of constrained capacity periods, airlines do have all manner of markets they can throw additional aircraft at and serve profitably. Clearly, the industry is getting quite frustrated with the delays in aircraft and the inability of having availability of aircraft and the additional maintenance of it. And Carsten Spohr's talked about this lots. We've talked about it before. There is an upside to a constrained capacity. And what this industry is very good at doing is putting too much capacity on, chasing it and killing yields for everyone. And if you have artificial means that stop people from doing that, then that's, probably quite good from a bottom line perspective. But, I think there are definitely, aside from the headache of having to rearrange stuff and not getting aircraft in when you want it, I think it is starting to weigh on people. There was Willie Walsh, I think, was feeling like he could voice the frustration in a way that the airlines couldn't, say things that individual airlines probably couldn't. He made clear that the industry has lost patience with this, and they'd look at anything they could do to kind of tackle it. I'm not sure there's very much they can do, but other than keep the pressure on. But at an individual airline level, whilst there might be some upside there, you have that almost hidden downside of it, which is failing to deliver what you say you will in terms of consistency of service. So, we are still seeing airlines, British Airways, for example, with problems with the 787 engines, were forced to take flights out at short notice, not offer what they were kind of hoping to do over the winter. Lufthansa had made a big kind of song and a dance about its new Allegris product, but it, that was late on top of the lateness, and when it did arrive, it didn't have the first class suite. So you have that kind of, here we are 3 years after the pandemic and the shortages and so forth that hit straight, and airlines still aren't really able to necessarily deliver that consistency of service that they might want. And then there's that hidden cost of operating older aircraft, and that was one of the things that IATA kind of flagged was, how many older aircraft are in the fleet today.
Yeah, exactly. And I think they called it a record where it stands, I think something like 14.8 years old, the average aircraft, compared with the sort of 20-year or longer average of around 13.8, I think, or something around that level. So yeah, sustainability is such a big focus. It's not the best look, I guess, to have average fleet age at that level. And clearly, like you say, that is almost whether it's entirely driven by the supply chain challenges, I don't think you could categorically say that, but it's clearly a big factor. We know that plenty of airlines have brought back aircraft that in 2020, 2021, there were plenty of sort of press releases going out saying, well, that's it for the A380 for us now. We'll never see them again. That's it for the A340, whatever. And in a not insignificant number of cases, you've seen those aircraft come back. And as you mentioned, there's a lot of wet leasing going on, and leasing going on that's keeping a lot of older aircraft in the fleet as well, as airlines wait for those new aircraft to be delivered. So yeah, it's a curious situation there, and it's clearly the case that it's not an insignificant part of the net zero effort either, that the fleet does move on to these new generation types as quickly as possible. That's clearly not happening, and we do know that passenger demand is projected to rise each year, and these delays, I think, are also projected to go on for some time. I think it's going to take many years to clear the backlog. Obviously, the picture is slightly complicated by COVID and what that did to the demand trends, but generally, yes, we're a long way off, and I think there's more turbulence ahead, I think, on those aircraft deliveries. Even I think projections that IATA is making today, I think it's been quite clear that the downside risk probably very significantly outweighs any chance that things are going to be better than expected.
And the sustainability picture, you're absolutely right. I mean, I think we're all probably a bit guilty of sort of taking for granted when airlines map out their sustainability roadmap, and the first thing is we're going to operate new aircraft, because that sort of feels, on the one hand, that's the easiest thing you can do, or that's the thing. There's an advantage to you're going to be upgrading your fleet. I'm sure, I think it is fair that airlines have accelerated a degree of that for sustainability reasons. Don't think that's just because they get an operational benefit out of it. I don't think you can dismiss it as a factor behind it. But we sort of say, oh well, that's just kind of part of the business course, and you'd be doing it anyway, even if at a different time frame. But actually delivering that is proving harder, and it means that you not only have this goal that they're trying to reach, which gets harder and harder as the SAF industry isn't picking up as quickly as it might do, as technological developments will inevitably take longer to happen than you might imagine. But also the progress they think they were making, they would have baked in that the aircraft will come, they will renew those fleets, but their starting point is further from behind. And it was interesting, Willie Walsh was obviously asked about, what does this mean for net zero? And it's, 2050, it shouldn't have an impact on, there's so much road, there's so many different avenues, there's so many bits and pieces. But the industry and IATA has sort of tried to push back about having set mandates and targets for 2030 in the near term. And part of that is around, there is no SAF to buy, so how can we be mandated to do it? But the other part of it is actually, some of the progress we thought we could make through the delivery of aircraft, that isn't happening as quickly as they would like. So, it does have a big factor, and it is probably the biggest thing on airline leaders' minds at the moment.
Yeah, and I think the other thing, of course, is that all these supply chain challenges mean when you're looking at beyond SAF and at sort of new airframes, new engine technology, for example, all of these things, I guess, at the same time are being pushed further back as well, not least because they will experience those supply chain challenges. But it just means that the whole industry is moving more slowly towards newer generation types because they're taking much longer than, and these are very expensive assets that no one's going to want to dispose of sooner than they need to. So it is, broadly, these supply chain issues won't just be affecting the aircraft currently in production, as even, the 777X, that kind of thing, which we just mentioned. It's, everything gets pushed back by it. And suddenly 2050 doesn't look so far away. Once you start getting towards 2030 and all that. So, it is a genuine concern, even though, as you say, it's not without its upsides in the short term. Certainly, if you're trying to keep passenger yields up and you're an incumbent in a market at the moment, it's kind of a pretty decent environment in that regard. But the broader picture, I guess, is one of frustration, and for good reason, I think, particularly with that net zero roadmap in mind.
So I think in short, where we got to is that profits are inching fractionally higher. Geopolitical factors are still a factor. Nobody can get there. People are a bit worried about getting their aircraft, and no one quite knows what will happen with Trump. And that's broadly where we were last year.
Yes, yeah.
Excellent. Okay, in the second half, we're going to take a quick dive into the global alliances and our old favourite, airline consolidation. So welcome back, and Oneworld celebrated its 25th anniversary. It's the second oldest alliance after Star Alliance, and I had a briefing with Nat Piper, who was he took over as chief executive for the alliance in April. He was formerly with Alaska Airlines, Delta beforehand, but he was at Alaska Airlines as they joined the global alliance. And the alliances are interesting because the first 10 years of them are these brilliant gold rush days almost, where people were heading around planting their flags in various parts of the world, and everyone's looking for a partner. And from a news cycle, it was fantastic. You'd have these markets where you have multiple airlines to target, and you'd try and work out who's going to partner off with who, which was a lot of fun. I think there's been a lot of soul searching among the alliances. And certainly, I think, maybe 10 years ago, I think probably, the questions were, is there a future for them? What's the point of the global alliances? And that was very much at the point where you saw these joint venture agreements across alliances take hold. And, it's taken a while for alliances, I think, to find what their role is. So I certainly think the pandemic both helped and didn't help. I mean, I think it helped because I think it made the case for, it's a terrible phrase, but seamless travel and connectivity, that whole digital experience much more obvious. And I think that probably created, this is this is what alliances should be doing, and this is where members can get the benefit of it. It was interesting talking to, Piper was talking about this at One World. They've got a lot of hope for this digital core platform, and all the alliances have been talking about this over the years, which is basically the only way you can get that seamless travel experience. By which the most obvious example of is if you are traveling across multiple airlines within the alliance, which is kind of the point of the alliances, is that you can reach these destinations, that you can use one app and you get the service and you get the level of service. And if you are particularly a top tier traveller, you get your points, you get treated the way you would expect to. And the only way you can do that is having everyone plugged in. And that's taking a while to happen. Now, Piper said, that the CEOs had heard this being talked about before. It's been harder to achieve. He's sort of very confident of One World getting to that position. So he's kind of renewed momentum behind that and getting everyone plugged in from the end of next year, which then means they can start to offer that more seamless experience for the customer. And it was interesting, I think you can see that that's where alliances would make a difference in a way which in the past it was about network reach, whereas this time it probably is about customer experience.
You're right. It's certainly where the focus is for them. I mean, there are bits and pieces around the edges, around some SAF buying, etc., that alliances have looked at, but equally, I think there's certainly, depending on alliance, there is a lack of enthusiasm for that option, given the complications there. So yeah, it's no surprise to hear that continues to be the focus. I think there was certainly first coming out of COVID, there was a very strong sense that those partnerships were really important when they're trying to rebuild your network after the big shock of the huge challenges that COVID brought about. And obviously, and certainly in One World, there's a good example in Finnair, where there was a very much kind of fallback on their alliance partners when they were reimagining their network and what Finnair would look like in the future, and also working closely with them with things like wet leasing out some of their extra capacity, that kind of thing. So there still is there's a sort of strategic element to it there, but ultimately, yeah, the tech side and the seamless journey, I think, is very much where, as you say, where they've identified the biggest benefit comes. And I guess we've just got to keep an eye on how that develops, and they all talk about it. And I suppose, yeah, it's the next 2 or 3 years. Let's see where they get to on that, because as you say, on the membership side, I think all the low hanging fruit is sort of done there. There are one or two, Riyadh Air, for example, coming into existence. What happens there? But equally, you look at Emirates and how comfortable that is outside an alliance, and you imagine maybe won't be a top priority. It might be seen as restricting their options as they're trying to build a global network of partners there. There's some interesting developments, obviously, in Air India coming back into maybe potentially becoming a force, and what that means for Star, but also at the same time, does Indigo, as it sort of reinvents itself as a global sort of network carrier, possibly, does that then look at alliance membership? And that, so there are some, I think, areas where membership could get interesting again, but who knows? Yeah.
It's really interesting. India is a prime example of it, and you've seen it in replicated in lots of other markets, whether that's Russia back in the day when people could serve Russia, or China, or Latin America, where in various markets, if you're after a network carrier proposition or someone who can meet your business traveller requirements, there are markets they would absolutely want to be in for reach, but where there aren't that many players. So India's a prime example of the way that market has developed. Internationally speaking, and almost domestically, temporarily, it has the air of a duopoly, relatively speaking, because of the strength of Air India and Indigo. The other players are in that market. CASA has big ambitions. SpiceJet, who knows how that will come back after its challenges. But there aren't loads of options. So Piper identified India as well. Yeah, that's a market. Sure, we'd like to do more, but what can they do? Air India is in Star. Indigo at the moment is following a kind of bilateral program. In fact, Japan Airlines, one more member, has just lined up with it. But there's only so much you can do if the players aren't there or aren't ready. For One World, Latin America was another area. Yeah, and I think Latin America tells its own sort of story of that. There's no market which has had quite so much shifts around on the alliance stage and around consolidation. One World had LAN originally, which were very well established. We're struggling in Brazil, for example, where Star Alliance had a couple of options there with Varig, I think, first, and then TAM, and then Avianca Brazil, and had 3 goes at it, and then LAN merges with TAM. They all go into One World, and then they can't get their joint venture, and that time leaves that, and it's kind of just doesn't. It's actually unaligned now, but is closely tied up with SkyTeam's Delta. So you're in the position where, and again, Piper thought, Latin America's an interesting market, but you kind of have to wait to see how things play out with the financial challenge. There's still, I think there's airlines still finding their post-pandemic identity in that market. So there is definitely relevance. It's much more on a case-by-case basis. I mean, we see, Virgin joined SkyTeam, something we probably would never have imagined Virgin Atlantic joining an alliance. Aer Lingus is part of IAG, but still isn't back in One World, having been in there originally. So it is much more of a case-by-case basis.
Yeah, and as you say, so you look at another recent example, the SAS going into the SkyTeam as part of the Air France KLM investment there. That's an interesting one, but it does show. I mean, SAS as a result have had to relaunch a European business class product. You talk about that kind of seamless integration only works if your product aligns with what your partners are doing, and that comes down to naming conventions as much and the actual physical product. So when you look around, maybe at some carriers, and Aer Lingus would be a good example, sort of Indigo maybe, where their business model doesn't necessarily suit what other alliance members would want from you. It may be the case that there's more to be gained by going your own way and doing those bilaterals, and that it's just not for them. But and I think that's why the focus within the alliances is very much on doing the best for the current members, and you can see where the real strengths are in those sort of, you mentioned Virgin and the transatlantic joint ventures, obviously creating a more seamless product there. Just you can see the obvious advantages, whereas Indigo joining an alliance and immediately having to launch a premium economy product and change its naming conventions and offer food for economy class passengers, because that's what the network carrier passengers would expect, for example, is perhaps a much bigger decision. And perhaps that again reflects some of the broad business models we see in the airline industry. Obviously don't drastically change overnight, but those kind of more hybrid models perhaps don't necessarily fit as seamlessly into those alliance setups as the more traditional network carrier sort of approach. So all sorts of considerations, but I think the alliances are obviously doing a good job of making themselves more relevant. They did get a bit of that uplift post-COVID from everyone falling back on their old partners, particularly when there wasn't the capacity, was still coming back online. But now that tech side is obviously where the focus is. And but I don't think the who's going to join what alliance will ever go away, as we talk about. There are plenty of hotspots still globally, and the alliance chiefs will always kind of play down the importance of that and tell you that they're quite relaxed either way.
There's definitely a degree still of musical chairs. I mean, it affects all the alliances. SkyTeam is probably the one which finds itself in a period of potentially most flux, good and bad, or perhaps no change at all. But obviously SAS has shifted allegiances from Star. ITA in Italy will be on its way to Star Alliance after joining the Lufthansa group. In Korea, they're going to be a net winner, I guess, because of Korean Air's acquisition of Asiana, which is in Star.
Yeah, so that's one, where Asiana, will I think has left Star Alliance as part of that deal. So Asiana will operate as a subsidiary of Korean Air essentially for a couple of years until the integration of that business into Korean Air. But again, a change there that where the Sky team seem to be benefiting from what will be an enlarged Korean Air. I think with Korean's acquisition there, they're building up a wide body fleet that puts them on a par with sort of the Cathay Pacifics of that region in terms of the size of the fleet. So they're really, I think, pushing to really build up the Seoul Incheon hub. I think there, South Korea as a country has sort of challenges around, I think, a declining population, that kind of thing, which is particularly acute. I think that those challenges exist globally, but there are, in terms of the local market, certainly there is a certain logic to not needing those two big network carriers and there and Sky Team benefiting as they might, I guess, in Spain potentially if the latest twist in the Air Europa saga is.
Absolutely, Air Europa, which is no longer heading to IAG, and if not One World membership, certainly some kind of affiliation with One World or being connected to that camp. The suggestion now is that if that's not going to happen, that Air France KLM could be interested in taking that, which would leave Air Europa where they would. But that might then in turn have an impact on what happens to TAP, Air Portugal, which...
with Star member. Yes, would regulators then want on the Iberian Peninsula TAP to go to Air France KLM and create this a particularly strong Sky Team presence maybe in that region, but equally, same could apply to One World. So it's a lot to think about in that regard, and I'm sure that kind of thing does come into the thinking of the regulators. And that's a whole other issue, of course, which we've covered quite a lot on the airline business site recently. But
I think Seoul is another very interesting market and a good example of one of the other things that the alliances can do. Again, I always like to think about it in terms of which airline member you're going to have, that kind of thing. But One World launched its first joint lounges in Seoul and Amsterdam. And obviously these are places where they don't have a home carrier and where there is a market and a demand for them. So, and it's notable that was, if you're operating in Korea and there were only two carriers, well, actually a lounge is, that is a way of getting your profile up and getting your service levels up in there and doing something that maybe you couldn't do just as a single carrier potentially. Maybe Star will follow that. I think what's interesting about that is even that isn't simple for alliances. There's a kind of that feels actually like quite a simple solution, except of course you need the airport to be able to do it. You need it to fit into their plans, their approach, their strategy, the space they have, the opportunity they have. You have to have enough operators to kind of warrant it. So ironically, Piper mentioned for One World, well, that might be an answer in India, except there's none of the airports that it really works for at the moment. But, I think you may start to see that as or we should view that as another weapon in the armory for alliances in terms of those markets where they don't have an operator.
Yeah, I think so. And probably, I was at the launch of the One World Lounge in Amsterdam, obviously, very much squarely in sort of Sky Team territory there as KLM's hub. But I think what's most interesting is, I don't think those things are easy to achieve either, as you mentioned, because you have got multiple players, obviously, who would want to use that lounge, and they're coming up with an agreement in terms of what it looks like, what the service offering is. Again, this all comes back to why it is complicated, particularly when you start talking about new members who perhaps are much more closely tied to a certain identity, whether that's on the budget side or the other end of the spectrum. I think talking to people there, it's not easy. And there will be markets where it works and it kind of is logical. And even, who pays for it, because these things don't come from a magic money tree. If it's a joint effort, then it needs to be paid for by the carriers, and not easy to achieve that. So it is noteworthy, though, that obviously those, as you say, those two markets, kind of Sky Team kind of hubs where One World have managed to pull that off. I don't think it's, as I say, an easy thing to have done. And again, as you say, another way in which the alliances are sort of retaining their relevance and adding something, I think, for the members looking forward in a way that perhaps would not have been as easy to achieve pre-COVID. So yeah, and the seamless thing is almost one of those things you hear everyone talking about in the industry. And I think I've sort of seen it in action in a couple of places, and when it works, it's pretty impressive. It's not always entirely within the gifts of the airlines themselves as well, obviously. So the airports are a huge part of certainly when you're actually at the airport. It's not something they can achieve necessarily on their own that easily, but let's see if they achieve it, then yeah, we can stop maybe talking about it as a abstract concept as much. And
without giving too much away about my personal circumstances, I was struggling to get one airline to do what I was hoping they might in some kind of circumstances. Trying to get 5 is really difficult. I had, of course, forgotten that you've been to that Amsterdam Lounge opening. How quickly the year has gone by.
Well, yes, I'm not sure when that was, but yeah, it was a good, nice trip and impressive lounge. But so yeah. There you go. First-hand account that you didn't expect to be coming there.
Excellent. Okay, well, that wraps it up for this one and wraps it up for the year. Thank you for your time, Lewis.
Cheers, Graham.
Good stuff. As a reminder, you can catch up on all the news and stories you mentioned in this podcast at flightglobal.com/airline-business. If you've enjoyed the podcast, please like and review us. By all means, give us a 5-star rating. It all helps. And don't forget to subscribe to get new episodes in your podcast feeds directly. And we'll see you again next time.